Good morning, everybody, and welcome to our webinar this morning, where we will be discussing with you the Trade and Working Capital Barometer. My name is Richard Hayes. I'm the Head of Working Capital at Nordea, and it's a pleasure to be with you again this morning. I'm joined today by two of my colleagues from Trade and Working Capital, with Kasper and Mathias, and they'll introduce themselves shortly to you. We're looking forward to sharing with you our latest analysis, where we will be looking at signs of economic recovery and trade recovery across the Nordics. We've been tracking over the last year and a quarter the leading Nordic corporates, looking at their financial statements, which have been publicly available, and looking at how this shows the signs of financial recovery from the coronavirus pandemic, and also leading indicators for where trade will be heading throughout 2021. This is all part of Nordea's commitment to bringing you leading advice across trade and working capital. And throughout this session today, please feel free to put any questions into the chat, and we'll pick them up towards the end. And also, we will have two polls during the presentation where we'd like to get your views on some of the topics we've raised. So really appreciate it if you could vote when the opportunity comes up, and we'll bring that into the discussion. But let me now ask Kasper to introduce himself.
Yes, good morning, Richard and Mathias, and good morning, everybody. I can see we're all still working from home here. And what a turbulent year it has been in general, but also in the world of trade. My name is Kasper Jensen, and I'm the Global Trade Finance Advisor working in trade finance in Nordea out of Copenhagen. Just in short, I'm really looking forward to this presentation, which Mathias is going to bring you very soon. I've been looking forward to, because one of the things that we have seen for many years, survival of the fittest has been now survival of the most adaptable, who can adapt to the changed environment that we are in. And I'm really looking forward, Mathias, looking at you right now, to see what, finally we have 12 months of data that you can present. So yeah, looking forward to this. Thanks.
Thank you, Kasper. My name is Mathias, and I work as a trade and working capital advisor here in Nordea. We conduct various trade and working capital reports as the Corona Barometer that we will go through shortly. We also cover the global development in working capital and how companies trade internationally. We also engage in customer-specific workshops, and we advise Nordic companies on how they can reach both strategic and financial targets by improving and looking at working capital. And that was it from us. So let's just go right into this Corona Barometer presentation. As Richard mentioned, we have tracked the changes in the key figures for the Nordic publicly traded companies quarter on quarter since Q4 2019. And the first part of the barometer is tracking the net sales in the change in net sales for the companies. And as you also mentioned, Kasper, 2020 really was a turbulent year. However, when we only look at the net sales, we see that the Nordic revenue actually increased with 8% when we compare the Q4 results, so Q4 19 to Q4 2020. When we dig into the numbers for each country, we see that the increase in revenue is really driven by the last quarters of 2020. If we look at the beginning of 2020, almost all companies in all countries saw their sales declining, of course, as a consequence for the worldwide lockdowns and the great uncertainty that followed. I think nobody actually knew what was going to happen when this really started to hit Europe in the beginning of 2020. We see that especially Denmark and Norway experienced large drops in revenues. Sweden and Finland saw a more steady drop. And the differences in these figures are mainly caused by the differences in the industries in the countries and which type of companies are traded on the stock exchanges for each country. Well, if we were to conclude anything from these figures, we could say that Corona affected the sales in 2020, but things seem to be back to normal when we look at the revenues. That is, of course, not true. Corona is still a challenge. There are still some level of uncertainty out there, I guess a lot of you joining in today are also struggling with some things in order to get back to normal. So the big question is, what will become a challenge in 2021? And we have some suggestions on this and things that you should be aware of, but we would of course also like to hear your thoughts on this. So it's time for our first poll.
Thank you. Yep. Christian, could you put up the first poll, please? Okay, so you should be able to see up on your screen in front of you, what do you see as your main challenges in 2021? And we'd be grateful if you could click one of those options, please. And we'll give it a few seconds for you to respond to that. So what do you see as your main challenges in 2021? And okay, I think that's enough time. So Kristen, can we go to the, excellent, there we go. So there's the responses we've got to the first question. So Kasper, really interesting actually that supply chain resilience is coming out as the leading concern there at 34%, and that's closely followed by risk management, which are somewhat linked, I guess, as well. What's your thoughts on that?
Yeah, I found that super interesting and also very much what's happening in the world at the moment. We saw how fragile this supply chain was 2 weeks ago in the Suez Canal. Just a small incident created a lot of fuss, and we're still struggling with all that ketchup effect here. But we have seen it in the last 12 months. We've seen that air freight suddenly went sky high. So sourcing from Asia, from China, on air freight was possible. But it was extremely expensive. And then suddenly people figure out, well, what can we do? And then we have seen companies buying and sourcing by truck from China, Malaysia, and Thailand, and Vietnam. And if someone have said to me 2 years ago, hey, we're going to source stuff from Asia by truck, I would say, you gotta be joking. But this is the life now. So interesting, and of course risk management with all the turbulent in all the nations, or in many nations and so on. And I totally agree that this is a very important factor in 2021.
Thanks. Yeah, absolutely. And the DSO part there is also quite interesting at 24%, but I think we'll touch on that in just a second. So thank you, Christian. We'll move back on to Mathias's presentation. Super. Okay, Mathias, over to you.
Can you still see my presentation?
Yes, we can. Oh, we've lost it now, Mathias. There we go.
Are we back?
Yep.
Perfect.
Yep.
So very interesting. Thank you very much for your engagement in the poll, and of course, supply chain is also what we see and hear from our talks with customers and companies, that this is really something that's important. We also have some suggestions on maybe not what the challenges are, but what you at least should be very focused on going forward. And we see profitability, return, and debt levels as some of the key things that you should be aware of in 2021. When we look at the EBIT results for the last year, these are more or less on the same level as in 2019 for all countries. But however, we see that the revenues have increased quite significantly and more than the operating profits have. And this could mean that companies are sacrificing their margins to win orders and to increase their sales. When we look at the return calculated as the return on invested capital, we see that it's actually also slightly above the 2019 returns on average. The challenges here are first that low operating profits can affect the ability to service the debt obligations, but also maybe the ability to offer competitive payment terms to new customers or in order to win a deal. When we look at the return levels, the challenge is maybe not so much the level itself, it's more or less on the same level as the European average. But we see that in times like these, and maybe this was also shown a little bit in the poll, that many companies, in times like this where companies are struggling, the focus seems to be on the profit and loss, and here on strengthening the supply chain, rather than the focus is on the balance sheet and returns. And this is connected to that we also see the Nordic companies increasing leverage levels in 2020 in order to compensate for lower revenues. What's interesting is when we dig into the data for the debt levels, then we see those are increasing. A big part of this debt have actually been used just to put in the cash and equivalents on the balance sheet to be like a buffer for uncertainty and a way to keep the company alive. It is, of course, important to remember that the return on invested capital has to be greater than the weighted average cost of capital in order to actually create some value. Besides the sales and profits and returns, we of course also track the changes in the working capital levels. When we compare the Nordic countries, we see that the Swedish companies have the highest amount of working capital on their balance sheet. We also see the Norwegian companies doubling the level of working capital, and overall the Nordic level of working capital have increased from around 7% to 10% in average. And working capital, and especially net working capital to sales, is an important key figure, as it shows how much of the total sales that has to be allocated to working capital liabilities, which is your outstanding receivables, so you wait payment from customers, it's your inventory that has to be financed, and it's the trade payables, so the debt towards your suppliers. And therefore we always aim for the low level, so the lower the level, the better. The high level in Sweden can mainly be explained by the heavy industry that we have in Sweden, where inventory levels are often valuable and the products are large and heavy equipment and facilities. If we look at the development in Norway, the main industries there are petroleum and natural gas and shipping, and this has really also been affected heavily by the pandemic. Some of our previous studies finds that especially for smaller growth companies, it can be very difficult to manage and to improve your working capital probably, because you might have to grant long payment terms if you are a growth company in order to get new customers. You might not have the financial strength to utilize economies of scale, and you might be in a constant and more tougher competition with other companies. On the other side, you might not have the same supplier base as larger companies, so the dependency towards your suppliers are very high, and that can make it more difficult to negotiate favorable payment terms. Proper working capital management is really essential for the financial health and operational success of the business, and especially on the shorter term. You can say that less working capital can lead to operations being more efficient and also helps to mitigate some risk. And when we look at the poll here, risk was something that you all were very aware of. When we talk about working capital and cash flows and return on capital, this is actually all connected. There is a potential opportunity for most companies to release cash, and this cash release can be an important resource available to company leaders to reinvest in growth or to distribute to shareholders or to deleverage, especially in times like this where we see debt levels are increasing and profits are more or less on the same level. It's very important to be aware that you have to service your debt obligations. So we have now covered the development in sales and profits and returns and working capital. But our data also shows that the payments were affected by the pandemic as well. Here we have calculated the average DSO for each country and the development quarter on quarter. DSO represents the days sales outstanding, so it's representing for how many days do a company have to wait for payment from customers. And the data indicates that during the lockdowns, companies postponed and delayed payments, and we see the DSO increasing for all countries in Q1 and Q2. When we compare the fourth quarter 2019 with 2020, we see that Sweden and Finland are more or less on the same level as in 2019. However, especially Denmark and Norway had longer DSO in the fourth quarter. Of course, there can be some seasonality in these figures, but when we compare quarters to the same quarter last year, we still see that something has happened. And when incoming payments are delayed, we also see that many Nordic companies start to postpone payments towards their own suppliers. And for most companies in the Nordic, the DPO increased as well. And the DPO represents the days payables outstanding. So how many days do you pay your supplier in on average throughout the year? Later this year, just a little teaser, we will launch our 2021 overdue report, where we also track the development in overdue receivables. And I think it will be really interesting here to see how the increase in DSO and the postponed payments will affect the overdue receivables and also the percentage of receivables not being paid. When we try to map 2020 for a Nordic company, we have already covered that, yeah, it has been a really turbulent year, starting the year off with lockdowns. The pandemic hit Europe, worldwide lockdowns, and companies start to see their sales decreasing. And this meant that payments were delayed, incoming payments were delayed, and companies started to postpone payments towards suppliers. However, we had this rebound in income in the late quarters of 2020. And sales started to catch up. Now we are in 2021, and we have already covered some of the challenges for 2021. But we actually don't know what the future will bring, and this is also what we will spend the rest of the year of being happy to engage with you on your key challenges and focus. Of course, many and most of the companies, also most of you joining in today, are trading with companies outside of Europe and outside of the Nordics, and we have also tracked the development in payment terms outside of Europe. Here we have analyzed the payments in US, India, Vietnam, and China. And when we compare the figures with the Nordic figures, the first thing we see is that the average payment terms, both from customers and towards suppliers, are much longer. We see that the average payment terms for a company in China is 117 days and 140 days in Vietnam. And the companies in Asia have actually seen their DSO increase more than Nordic companies throughout 2020. This is mainly due to the high number of suppliers based in Asia, and these must often accept longer payment terms. But to finance these outstanding receivables and the long days that the supplier in Asia have to wait for payment, is financed by the suppliers in Asia actually postponing or having long payment terms towards their own suppliers in these areas where they source themselves. When we analyze the companies in US and India, these seems to be more focused on working capital. And this could mean that they would demand shorter payment terms from customers. And you should be aware of this if you trade in these areas, of course. And the main point with this slide is to address how companies, and especially China and Vietnam, struggle to finance these days, as we will also see shortly that the interest rate in these areas are significantly higher than here in the Nordics. Now we will actually launch our second poll, where we'd like to know more about your strategic focuses in 2021 after we have covered the development here in payment terms, both for the Nordics and outside of Europe.
Thank you, Mathias. Yeah, Kristen, can we have the second poll, please? Okay, so same again, if you would give us your views, please, and by voting. The question is, looking ahead to the remaining 3 quarters of 2021, what is your main strategic focus? Growing sales, risk mitigation, risk management, balance sheet optimization, supply chain, or other? If we could have your thoughts on that, that'd be appreciated, please. Okay, thank you. Kristen, can we have the results? And there we go. So growing sales coming in at number 1 at 37%, and interesting, the supply chain again 26%, linking very closely to the previous poll. Mathias, your thoughts on growing sales at 37%?
Yeah, I think it's linked to one of the previous slides, and we also see that in times like this where companies struggle, the focus seems to be on sales, and of course I can understand that, because some of the first things you look at is how much is the revenue for our company, but it is also really important to look at the balance sheet and to be aware of the return on invested capital or return on capital employed, whatever your financial and strategic targets are. We did some study, it was some years ago, but there we could actually see how the stock market, if your company focuses more on the profit and loss rather than the balance sheet, the stock market will you'll do better on the stock market if you focus on the return on the invested capital rather than the profit and loss. So it's a very important focus also for investors if your company is traded on the stock exchange.
Interesting. Okay, thank you for that. Let's go back to the presentation, please.
Yes, just coming back from the poll, just a sec. Yes. Now I will hand it over to Kasper from Trade Finance, talking about the differences in interest levels, also linking it to the payment terms and financing suppliers and so on.
Thank you.
Mathias, can you put up the slide?
Yes, you can see it.
Nope, not yet. But what I found really interesting was that especially the days in Vietnam and China were 117 and 140. Still can't see the slide, Mathias. But what you are about to show probably is the world map, where you have plotted in the interest levels around the world.
Yes, it says presenting. Can you see it, Richard?
Shall I draw the world map here? No, I can't see it. Okay. Yeah, no. Okay, so what's really important is that the Nordics, Europe, we live in a very low interest level market at the moment. And when you look at a lot of your customers or your suppliers, a lot of them are located in markets where the interest level is quite different than the Nordic one. And as you will see here, is that some of the most important sourcing countries, for example, if you go to Asia, where you have interest levels, of course, in South Korea around 0.5, but the rest from 2 and up to 9, and that is the base interest. So on top of that, then you have the bank margins and so on. And this is what you really have to bear in mind is that coming from zero environment with the bank margins in Europe, compared with your customers or your suppliers in Asia, what is the cost of capital? That is super important. That is both for the import managers, the import department, but also for the export department, the export managers, to be aware of what is the financial situation of your customer or your supplier. What is their interest level in their countries? Meaning, how much, if you are sourcing from Asia, how much more expensive will your product be? Because if they have an interest level of 9 plus bank margins, then this pencil might be 15% higher in price, the more deferred payment days that you will grant from them. And we just saw that the average was 117 and 140. That's a lot, and this is really where you have to talk to, for example, us in trade or working capital, talk about what kind of possibilities do you have, what kind of payment terms, what kind of financial packages can we support you with, so you can support your buyer or your supplier with getting access to faster money and so on, if we're using some kind of bank product like LCs or purchase of invoices and stuff like that. So that is super interesting. And if you look at this map, we just highlighted some of the interest one, we go quite high in some areas. This is what please talk to us when you are facing difficulties in growing sales, which was really important, which we just saw in the post, because giving credit time at the moment is super important, and that's why we see export is increasing. If you can give your buyer some kind of financial package with them, saying, well, you are going to pay in 3 years, Nordea will take care of this towards the exporter. So this is super important here. So please contact us if you have questions about sourcing or about selling, exporting. Next one, please, Mathias. We were running a bit out of time here. The one at the right here, it's the classic trade finance scheme where you have the importer, exporter, with the low and high risk, and what kind of products do you have in the middle, and those products are like basic, and then you can add on with deferred payment days and financial packages in these. But also so much things is happening right now, as I talked about in my introduction. We see also regulations on payment terms. The EU unfair trading practices is coming up. And the industry is moving so fast as well. We are heavily involved with WeTrade at the moment. So a lot is going on. The main message for me is that keep in touch. Ask us about what's going on in the world. How can we help you source better, smarter, or sell better and smarter? So yeah. And now we have 4 minutes, Richard.
Thank you. Yeah, super. So thank you very much. We've had a number of questions actually come in on the chat, so I will try and bring these up right now. There's a question, Mathias, quite a specific question for you. I think it was on slide number 5 you showed. Do you have the information as to which sectors grew plus 8%? I'm not sure whether you'll be able to address that question right now, but maybe if whoever sent that question in could get in touch with us, we'll be more than happy to talk you through that specific and give you the answer to that question and the commentary around that slide.
Definitely.
We also, sorry?
Yeah, definitely.
Yeah. We also have a question in regarding supply chain. So a question that both you touched on, Mathias, and also you, Kasper. We are looking at our options right now and considering whether it's the right time to support our suppliers, specifically our key suppliers, or we should wait for further recovery. What are your thoughts on this at this time?
To whether you should wait with the supply chain finance program
yeah, the question, I think the question is more around supporting key suppliers, whether that's the supply chain financing program or another way of supporting suppliers through trade. But I think the emphasis there is what we've seen coming out of the polls here, that suppliers, supply chain, that's kind of the key focus at the moment.
Yeah, and it seems like it has never been more important than it has now. There have been much talk in the news also that especially small suppliers and small suppliers in Asia are really struggling with liquidity, maybe especially in the beginning of the pandemic. So I would say it's never more important than it is right now.
Yeah, I totally agree with you, Mathias. It is super important, and it is much more important when you see the levels that they have increased on their deal sales outstanding, and it's a lot to finance 140 days when you have an interest level which is so much higher than what we have here in Scandinavia. So talk to the supplier, listen about their financial situation, ask them, what do you pay? What is your cost of capital? And then compare what your cost of capital is. It's super important. And then it's not difficult to see, okay, maybe we should give you, even though that we demand 120 days, then we can structure it and give you a financial package with the low interest level, using the low interest level that we have here in Europe, so that your supplier will benefit of that instead of their extremely high levels.
Super. Okay. we're out of time. Thank you to everybody for your participation today, and also for your votes on the polls. That was really helpful and really good in terms of shaping the direction. Thank you for the questions. We'll be making this session available on Nordea Insights as well for any of your colleagues who weren't able to join, or if you'd like to review any of the material. And as we said, don't hesitate to get in touch with us. If you have got further questions about the material we covered today, or you have a question you want to go into some detail on, get in touch with us. We'll be delighted to talk you through it in more detail, and keep an eye on forthcoming webinars where we'll be discussing some of the pertinent topics in trade and working capital throughout the year. So have a lovely day. Thank you for your time, and we'll talk again soon. Bye-bye.
Thank you. Bye.